There are people who treat property like a sport. They study the field, watch the opposition, and play the long game. And then there's Simon McDonald, the kind of bloke who doesn't just play in New Zealand's mortgage arena, he sets the playbook, calls the shots, and still finds time to tell everyone else where they went wrong. He's ranked in the top 20 mortgage advisors in the country, which in New Zealand terms is like being in the starting 15 of financial advice, minus the mud. Today we're asking the big questions, the ones that matter to anyone trying to score their first home, their next investment, or simply avoid being drop-kicked by interest rates.
Financial freedom faster. Financial freedom faster.
Before we get into it, if you're serious about property, start with the MortgageHQ snapshot. It's ripped the lid off the game for thousands of Kiwi investors. No fluff, just a sharp look at your real options. Description below. Take the shortcut. Simon, actually, you're top 15, like you're the Christian Cullen, really, of financial advice.
Yeah, that's nice of you to recognize that. It is one of a small accolade. I don't like to boast, and most people that are on that list will say this as well. It's all about the clients and what you can provide for them. And yeah, I'm just proud to be a part of the industry.
I'm going to stick on the rugby parlance for just a second. If you're in the top 15 and you're all black, you know, there's plenty of club rugby players. What separates a great mortgage advisor from those who are still trying to make it into the first 15?
I think it's two things. I think it's really embedding yourself into how the client experiences their application at the time, right? They're not just another number. They're a real human being. And by actually immersing yourself as well into the game really gets you to being able to help people through an application, to really understanding what it's like to be that person on the other side of the computer screen or even in person. So, for example, I find the best advisors also to be investors.
Now, let's actually test him on this because Simon and I know each other reasonably well. I can assure you he bought a shitbox last year. Now, most people wouldn't have bought it, right?
That's right.
Right? Okay. You've got a few things in your portfolio, but this is something that most people wouldn't have bought. So why did you buy it? Describe what you've bought. It is a shitbox. And why it's potentially gold for you.
Yeah, I think it was just because of the yield for me. There was a bit of equity in the deal on purchase. We did some renovations and added some value.
Where is it?
There's two in Gisborne and two in Hastings that we purchased.
Right. And before we start, did you buy it sight unseen? You just did the numbers. How did you find these properties?
I didn't travel down there.
So that's the first thing, right? That's the first thing that most people think you've got to go into the market to buy in the market. So explain how you found these gold deals.
Well, I do have some really close contacts who do a lot of these deals in these areas. And so I share those contacts with my clients as well. So in short, my whole life for investing has been in Auckland. And I do a lot of research in the specific suburbs and why to buy, and I'm more erring towards capital growth and or development projects. And so I really needed a rebalance. And so instead of me relearning these suburbs and areas and cities outside of Auckland, I employed the services of someone who is an expert in that area to help find me.
Okay, stop you right there. Now, how much did that cost you? 15K?
It didn't cost me anything up front.
Okay.
Yeah. So
because this is another thing that people are scared to spend a little bit of money. Like I'm just going to say $15,000, which in the scheme of things, for some people, that's a lot of money.
Yes.
Right. But reality is long term, if it's a 5-10 year plan, this is chicken shit money.
Yeah, it is.
So how have you been able to find this in funders?
So the way we refer consultants and property finders. Property finders essentially receive money from you up front and go and specifically work for you on your behalf. They're really good for people that may not be the best at running the numbers, may not be confident with making negotiations, may not be in a position to do things without guidance. A consultant, however, does this day in, day out, and specifically has products tailored for investors. They purchase them, they take some of the risk, then they look to on-sell it prior to settlement. And so if you know your numbers and you can run them correctly, you look at the equity gain at the beginning, but also the cash flow. And if it works for you, you can pick that up for no money up front. They just take the margin on the on sell. So they purchase a 500, they sell it to you for 550. It's worth 600, and you do some of the renovations yourself. Then you can pick it up for what you're selling it for, so no extra cost, but they've got that margin in the purchase.
Okay, I don't need to know the address, but we want to talk in vague figures. Just tell me about your number one shit box.
Yeah.
Okay, what you purchased it for and why this was so bad that no one else looked at it, but you saw a deal.
Yeah. I think it's just because I get these come through all the time, right? And so I'm looking at them. This one in particular, in Hastings was providing close to 11% gross yield, and maybe like 40,000 equity uplift. It was only around the high 600, 700K purchase price range, and so
So why didn't people want it?
you know. There is a lot of stigma in those areas, but also there's some legitimate concerns. You know, it is an area where you've got some activity, unruly activity, and so it really does it really does scare a lot of people off. But you know, I've got a great property manager down there, and he does an amazing job, and the property has been doing well so far. So. It's worth the risk.
His wife wears the pants in the family. So how did you get this across?
Well, I guess
She doesn't know. There we go.
Well, she doesn't know the full details.
She doesn't know the full details. Another great piece of advice, Simon. Yeah, go on. I agree with you.
I guess
On a need-to-know basis.
some of the deals that we've done together in a lot more detail in Auckland have been like 4x the purchase price, let alone the development costs, right? So she kind of looked at that and said, oh, there's a little bit of play money. Yeah, you can go ahead and do it. I trust you on this one. So yeah, it's worked out so far, and it's bringing in some cash to equalize some of the really negative cash flow properties in Auckland.
If you're wanting to get capital on something straight away, you got to think outside the square in this market.
Yeah, but you got to understand also.
I'm going to say your first home buyer, like buy an investment property, get some capital, then you got enough to buy into Auckland.
The issue with that is that if you go to the bank and say, I'm buying an investment property, then they're going to want 30%, and you can't use your KiwiSaver. And in a lot of cases, first home buyers, like that's where the majority of the deposit is coming from. And so, no, it's not what I recommend. Additionally, if you're on the margin of low deposit for your first home buyer purchase, then what that pushes you into is a much more scrutiny from the bank. The banks, there's no way the bank would take that security the way it was if it was a first home buyer. The bank liked it for me because I had a lot more equity up front to purchase the property. I did use 100% finance, but I had a lot of equity in other properties that allowed me to finance it, and they took their greedy hands over both of them.
So this isn't some sort of secret strategy, though. What you're saying on this podcast today is that this advice is available to people who contact you at MortgageHQ, like you would make available these people.
That's right. And we're not reinventing the wheel. I find there's a lot of like pretty brochure type products out there, and we're not doing that. We believe in the fundamentals, and there's been plenty of books written over the years on how to do this and how to master it. And so we really lean on some of those education materials. We do our best to try to promote this in our educational material online, and deliver it more regularly for people to motivate them to go there, do their own research, and then we support them along the journey. But you're right, it's nothing brand new. It's returning to the fundamentals.
My good friend Dave Whitburn says deals come up pretty much every week if you know where to look. Is that how you find it as well?
Oh yeah. Tens of deals in each city per week. So yeah, absolutely.
It comes down to how motivated you are.
Absolutely. Yeah. I mean, people underestimate how much work is involved to actually get ahead. They look at other people, they say, oh yeah, they got that property, or they're doing well, and it just happens. That's not the case. People don't see all the late nights, all the offers that they put in, right? All the heartache, all the uncertainty, right until the point that it works. You're questioning yourself whether or not it's going to. And it's the people that push through that actually get those deals.
I always subscribe to the Gary Player quote. The harder I work, the luckier I get.
Yeah, I like that.
Simon McDonald, thank you very much.
Appreciate it.